Hi everyone, and welcome to Talk to the Expert at property-investors.co.nz. Today we have with us Rene McLean from Property In Depth, Auckland franchisor. Today we will speak with Rene about the difference between cash flow versus capital gains. Many investors in South Auckland and various other parts of New Zealand invest in areas which has better cash flow in opposed to areas which experience larger capital gain. So welcome to this interview, Rene, and
thank you.
We're happy to hear your input on that.
All right, fantastic. A lot of people have the idea that you either can have cash flow or capital gain, and that's it. Generally speaking, in the long term, more central, better quality areas do have a better capital gain than lower cost areas with a lot of rental property. But there's a lot of variances in between that, and what you've got to be very aware of is that markets move at different times and at different percentages, and it is certainly possible to have capital gain and cash flow, but you do have to be aware of your timing. For example, if we look back at the beginning of the last boom in 2002 to the end of that in 2007, we had good quality areas normally increasing by close to 100%, but areas, the bottom of the heap, so to speak, areas like Clendon with very good cash flow, they actually increased more than that, about 150%. Okay. So you're getting both cash flow and capital gain. The only thing was, when we had the downturn in 2008, is that those properties in Clendon decreased by about 30%, and the ones in the better quality areas went down by perhaps 10% or so. So the cash flow areas tend to be more volatile, but if you get your timing right, you can actually get more capital gain than a better quality area, although not necessarily over a long 20-30 year period. The trick is to make sure you sell those cash flow properties when the market is on the up, and your better quality properties, even if the market's down, you can still get a reasonable price for them. The other thing is, let's look at something like apartments, where a lot of people think there's no capital gain on those, but obviously there is good cash flow on most of them. Again, it's a matter of timing, and even that sort of market works a little bit different to the normal housing market, in that the apartments were saturated with a lot of supply up until about 5 years ago. Yes. So they never really had the opportunity to get capital gain because there was just more and more apartments being built, and there was an oversupply, and the values did come down, and a lot of people got burnt. We own a couple of little shoebox apartments in Auckland City. Those apartments have gone up by around 30% in the last year in terms of capital gain. Mm-hmm. Plus we're getting about a 10% net return on them, so and we didn't even buy them at the bottom of the market. So again, it's certainly possible to get capital gain out of apartments, but it is the timing that you've got to watch. In terms of properties out of Auckland, in the smaller towns, they can also be quite volatile, and they can also go down quite significantly in the downturn, and they can even miss out on property cycles, like they went up by up to 300% during the 2000s, so I'm talking about areas perhaps like Invercargill and Tokoroa. Not sure about Alexandria, you'd know better about that, Hadar. But they didn't really have much of an upturn so much in the late 90s, which Auckland did. So Auckland certainly is fueled by immigration, and there's certainly pretty solid capital gain.
Yes, this is absolutely correct. Every investor should have a balanced portfolio, and in the end of the day, people want to gain wealth and accumulate wealth, which would be generated through a capital gain. Cash flow is a great strategy, but if somebody investing in a cash flow property, it's recommended to do it in the main centers, where the capital gain will be stronger than peripheries and smaller towns. Thank you, Rene, for this short interview. It was great information for our users and YouTube channel subscriber. Thank you very much.
No problem. Thanks, Rene.